Hey guys, just a quick little update. I'm actually recording two videos today because a lot of you have been asking me for my opinion on both 2U stock and AMD stock, both of which are down huge after earnings. AMD is down like over 13% in the last couple of days, and 2U crashed by about 65% in a single day after earnings, which is just insane. I happen to own both stocks, so that's why a lot of you have been asking me for my opinion on them. But I'm going to be uploading the 2U stock video on Friday, which is the video you're watching right now. And then on Saturday, I'll be uploading AMD. So keep an eye out for Saturday. That's when I'll be putting the AMD stock video, because it does take me a little while to edit these videos and put them together. And also, I don't want to spam you guys with too many videos. So anyway, that's why I'm kind of separating them. But anyway, let's talk about 2U, because this is actually a spec stock that I bought a while back. And as you guys have seen in previous videos, this stock was much less than 1% of my portfolio. But I recently did add a little bit more after this crash, so it's at about 1% of my portfolio right now, and I am down a lot on it. But it's because it's only 1% of my portfolio, it doesn't really affect me at all. It doesn't really move my portfolio. Stocks like Microsoft and Disney and Amazon, those are my biggest stocks, and those are the ones that really move my portfolio. But 2U doesn't really do anything. But the stock is still down huge, and so a lot of you want to know what the heck is going on with the stock, because at over 65% drop in a single day, that's pretty insane. So we're going to talk about it today. We're going to look at the earnings. We're going to see what happened, why the stock crashed, and I'll let you know if I plan on buying any more. As I just mentioned, I did buy a little bit more, but I'll let you know if I plan on buying any more in the future, or if I'm just holding, or if I even plan on selling out, or what my thoughts are on everything. So I hope you guys enjoy this video. Let's get started. What's up everyone, my name is Ale. Welcome back to my world of stocks. So when taking a look at 2U, I originally bought this stock as just a very tiny spec stock, and I saw it as just a play on the online education market, because when I look at education, I see there's definitely been a lot of periods of time where enrollments have actually gone down, but online enrollments have actually gone up. And for that reason, I see a lot of growth potential in that market. And when looking at a stock like 2U, they've had very high sales growth, which we'll take a look at in just a second. So it's been a very high flying kind of growth stock, but their earnings have pretty much always been negative. I mean, they've always really struggled to be profitable. So for that reason, I still considered it a very high risk speculative stock. And as you guys know, in my portfolio, I allocate about 10% of my portfolio to speculative stocks, but most of that is taken up by like Tesla and a little bit of NIO. But then when looking at 2U it was always less than 1% of my portfolio. It was always a very, very small position. And I only added to it very slowly over time. But since this most recent crash, like I said, I did add some more. So now it's at about 1% of my portfolio. But you guys should just know that this is definitely a speculative, very high risk stock. And I've been receiving comments from people that say that like a third of their portfolio was in 2U, which just, to me personally, I'm not trying to sound like mean to those people or anything like that, or knock them. I'm just saying that just sounds like a bad idea for me, because I feel like speculative stocks should never be a really big position in your portfolio. You should always have a stable core set of stocks that are companies that are reliable, that are proven, that have been sustainably profitable. That's a big deal, because when you run into issues, if we were in a recession right now, what's going to happen to a lot of these companies that are not profitable? It's going to be difficult for them to raise funds. Are they going to be able to survive? There's all kinds of different issues that you have to think about. If you're going to put any money into speculative stocks, you should be 100% comfortable with losing all of that money. It's a gamble. I mean, at the end of the day, it's a gamble. And so for me, at less than 1% of my portfolio, 2U could literally go bankrupt, and it would really mean nothing to me. I wouldn't even lose sleep over it, because again, it doesn't even really move my portfolio. So that's why I was okay with making an investment in 2U, which I wouldn't really call an investment. It was more of like a speculative kind of long-term play on the online education market. And I just felt like 2U gave me the best exposure to that. So that was why I originally bought the stock. But anyway, enough jabbering. The stock is down about 65% after they announced earnings in a single day. It's absolutely crazy. So let's take a look at what happened. Okay, now technically the stock is still positive in the past 5 years, but only barely. And unfortunately for me, that wasn't when I bought the stock. I actually bought it after they crashed down to the low 40s, and I bought it very slowly in small amounts as it dropped to the 30s. And after the most recent crash, I was able to double my position, which it brought it up to right around 1% of my portfolio, because it was quite a bit less than that, but now it's at about 1%, with an average cost of about $21, leaving me down about 40% at the time of this recording, which is definitely a big deal, but I suppose it could be a lot worse. In any case, the stock in general is down an absolutely massive 82% in the past year, after crashing by almost 65% in a single day right after earnings. And it was actually down even more in after hours, but it had a nice little recovery today, leaving it down closer to 62% for the week, which is still unbelievable. By the way, I don't know why the percentage didn't update there to 9% on the top of this webpage. I think it might just be a glitch of the website or something. But anyway, you can just ignore that. It's not a big deal. In any case, what caused the crash? Well, as you know, they reported earnings, and when looking at it, it really wasn't bad enough, in my opinion, to cause the stock to crash by this large of an amount, but it was still very bad. Now, they did actually beat revenue estimates by over 8.5%, reporting over $135 million, which is also up by 39% year over year. So almost 40% growth in the quarter year over year, which is very high sales growth. And I'll actually show you on a chart in just a second how they continue to put up really high sales growth rates. But when looking at profits, that's where this company really continues to struggle. And it's become a major concern. It's something that really just kind of sends everything falling apart. Now, they reported EPS of negative 43 cents per share, which actually missed analyst estimates by over 22%. So that's a big miss. And if that wasn't bad enough, it's a bigger loss from the year prior by over 120%. So they're definitely going in the wrong direction when looking at their earnings. But as bad as all of that sounds, what really sent the stock cratering the most, in my opinion, was the company's guidance and the subsequent earnings call, where they had to respond to concerned analysts, and they really didn't do a good job of answering their questions, and that's probably putting it very mildly. I listened to the call myself, and most of the answers went along the lines of, well, we'll give you more clarity in November when we hold our Investors Day, but we don't have a lot to share right now. Obviously, the analysts were really confused by this lack of clarity, and the stock just continued to tank during the call. Now, taking a closer look at what some of those negative comments were that were made on the conference call, the CEO mentioned that they are scaling back their launch of new graduate programs next year, and while they won't have specifics until Investors Day, he did say that it will probably be less than half of the 21 programs that they were originally planning to launch. So that's obviously going to take a huge toll on their sales growth, which is the biggest reason why anyone is invested in this company in the first place. But the reasoning for this is that they claim it would improve the efficiency of the company's business in an effort to reduce costs associated with launching those new programs, and instead leverage the ones that they already have that are very lucrative for them in an effort to try to reach positive free cash flow. At least that was my understanding. If I'm missing something, feel free to correct me in the comment section, because again, this was like a very kind of muddy, very unclear earnings call, so it was difficult for me to interpret what they were trying to say during most of the time. In any case, I do think that some of this does make sense, because this is a company that continues to lose huge amounts of money, as we'll take a look at in just a second. But the other thing to consider is that they also mentioned that even if they didn't launch any new programs, they still estimate that their grad business would still grow by mid to high teen percentages over the coming years, which, to be fair, is pretty impressive, and they obviously will launch some new programs. It's just going to be a much lower amount, and reduced amount, by like half the amount. So I just don't really know how that's going to affect their sales. Again, people kept asking for clarity on this, but they just kept pushing it to Investors Day. They just kept saying, well, you're gonna have to wait to Investors Day. And that's ultimately the problem, is that investors wanted this clarity, and 2U just kind of refused to give it. One analyst in particular asked if they can give an idea of how long it might take to reach positive free cash flow, and the response was the same, that they'll just have to wait until Investors Day for more information. So that, coupled with the comments about a changing market with increased competition, sent the stock crashing by unbelievable amounts. Still, we're talking about a company that consistently grows their revenue by huge amounts every quarter, usually in the 30, 40, and even 50% ranges, with a compound annual growth rate of over 44% over the past 9 quarters. But again, that might be under threat now, so that's a concern. But as bad as the future is looking, they actually did raise their revenue guidance for the full year to $571 million, which is growth of almost 40%. Now, I'm not sure if I'm understanding these numbers correctly, but I believe the reason for the higher revenue is due to certain benefits coming from their Trilogy acquisition. Although I think they mentioned that that's not really included in the revenue, so I'm not really sure why the revenue was raised. I'm guessing there's just kind of some synergies going on or something like that, but it's a little difficult for me to understand it because, again, they didn't really provide a whole lot of clarity, at least just in my opinion. But anyway, speaking about that acquisition, the Trilogy one, they recently finalized the deal to acquire Trilogy for about $750 million. And the acquisition is expected to benefit them in a pretty big way because it almost doubles their university partners from 36 all the way to 68, who they can obviously continue to sell more products to and more services. So it becomes a much more sticky kind of business. And it also increases their international footprint in markets like Europe, Mexico, Australia, and Canada, and even parts of Africa too, while also expanding their offerings of technical, skill-based courses for enterprise customers, which is honestly a really big deal because they're not just teaching students, but they're also training employees and even offering coding classes, which we all know coding is a huge deal right now, and it's going to be an even bigger deal in the future. And they estimate that the overall market here could be worth hundreds of billions of dollars. So, that's a lot considering that 2U doesn't even make $1 billion. But speaking of billions, the acquisition actually pushes their projection for hitting $1 billion in revenue by a whole year forward from 2022 to 2021. So again, these are some pretty big benefits here. However, the acquisition seems to also be a huge drag on profits, especially right now when looking at the rising costs associated with the acquisition. In fact, before the acquisition, they were expected to post a net loss of less than $80 million for the year, which was still a huge increase, but part of the reason why was because they were pushing for an aggressive advertising campaign, especially in the first half of this year and later on into the year. But ever since the acquisition, they raised that guidance for an even higher loss, this time surging all the way up to over $150 million, which is practically double the amount that they were previously expecting. What's weird is that I couldn't really find a lot of information regarding this increase in their guidance for the loss, except for some parts of the conference call where they kind of briefly mentioned that loss guidance has changed due to costs associated with the Trilogy acquisition, which I guess does make sense, and maybe it is just kind of a short-term issue that they'll have to just kind of get over this hump, but it still seems like a really, really big increase to me, and it seems a little ridiculous. And that's ultimately the problem with this stock and with this company, is that they refuse to give us any kind of clarity until Investor Day. Now, I'm definitely curious to see what their strategy is for reaching profitability, and I'll definitely be watching what they have to say on Investors Day. But I gotta be honest, me, along with a lot of Wall Street, obviously, have just lost a lot of confidence in this company because of the way that they're handling everything. So look, with an average cost of about $21 a share, that I'm definitely comfortable with that. It's a much lower price than I ever thought I would have on 2U. I always thought it was going to be definitely a lot higher, but things happened and the stock went down, and now my average cost is 21. I'm okay with that. And I still feel like 2U does give me some exposure to the online education market along with the workforce training market, which I think is going to be huge, and that really gets me excited a lot. And this is still a pretty high growth stock, even though they've kind of tamed expectations and they've lowered their outlook without giving us any specifics, which I hate. I hate it when they won't give us. Why even mention that you're gonna have lower sales if you're not even? I don't know. It kind of stresses me out when they don't give specifics and they say, well, we'll talk about it at a future date. Well, what do you think is gonna happen between now and that future date? The stock is gonna get crushed. So it just kind of, it does upset me because I know that there's a lot of retail investors that are probably invested in the company and now they've probably panicked and sold for a loss, and it's just poor handling. But anyway, I don't have any intention to buy any more of this stock because, again, at $21 a share, I'm comfortable with that price. At about 1% of my portfolio, that's more than enough exposure to this company for me. I don't want any more exposure. 1% is good enough. It's a decent little spec play on the future. If I lose that money, it won't affect me. If the stock happens to return to previous levels, it would have to skyrocket, and I would make a decent little profit off of that as well. And then I can funnel that into another stock. But at this point, the stock crashing by like 65% in a single day, I just don't really see the point in taking the losses at this time when we still don't really know what's going to happen on Investors Day. So I'll be watching that very closely. If I'm very disappointed with what they have to say at Investors Day and things just kind of continue to get worse and I just don't see management doing a good job of fixing the company and marching towards profitability and sustaining their revenue growth, then I'll have to readjust at that point, and maybe I will have to just kind of sell out and take a loss. But again, at this point, down like 65% a single day, I just don't really see the point in selling. So I'll just be holding my very tiny position for the long term, assuming that I'm willing to kind of hold it, assuming that things go like management is saying they'll go. But if things change, I'll readjust. And anyway, I'll be sure to give you guys an update if anything changes with this company or with my position in the stock. But let me know if you guys are doing anything. Let me know if you guys are invested in this company or if you're thinking about investing in this company. Again, just take my word of caution. It's a very high risk speculative stock. So just be careful, guys. I don't want to see anybody lose any money. So anyway, that's all I have to say. I don't think there's anything else to say. I hope you guys enjoyed the video. If you did, make sure you hit the like button. Thank you so much for watching. It really means a lot to me. And I'll catch you guys in the next one. Make sure you watch the AMD video on Saturday. Should be a fun one as well. All right, take care, guys. Bye.